With us in studio, we have Isaiah Mashlanga from Rand Merchant Bank. He is an economist at Rand Merchant Bank. Welcome, Isaiah.
Thank you.
Isaiah, let's speak about the midterm expenditure. What were your thoughts on that? What do you see happening around that, and what did that mean? What did what Minister Gigaba said about the expenditure mean for the economy on the whole?
I think firstly we have to say this is a hugely positive budget, possibly the most positive over the past 10 years, if it were to be. But I think given the economic environment where we have weak economic growth, to see government cutting expenditure by 85 billion over the medium-term expenditure framework means that they mean business in terms of bringing the fiscal consolidation back into sustainability after the disastrous medium-term budget policy statement we saw last year in October, which resulted in credit downgrades. Yes, it's going to be depressive for economic growth over the short term, but if we look over the long term, the debt service cost savings that will result from paying lesser interest rates is going to be hugely positive on economic growth, because that can be deployed into productive investment in the economy.
Absolutely. Also, something that comes through is that over the medium term, 3.8 billion rand is allocated to school infrastructure backlogs grants. It will replace 82 inappropriate and unsafe schools. There seems to be a lot that's going to be pumped into education, and specifically we were looking at the fee-free education. And we are looking at 57 billion rand being made available for that over the next 3 years. What do you think of that?
If you look at statements issued by rating agencies over the past number of years, or you can say as long as our democracy have lived, including the likes of IMF, the World Bank, and many other researchers, they have always pointed out the lack of skills as one constraint to our economic growth. So it's a very welcome development that funding for schools is going to be increased. Also, free tertiary education is now going to be implemented. That is a very positive step in trying to unlock the skills gap that we have had over the past years, which should add to the positive economic growth outlook which was tabled by National Treasury, not necessarily for this year or the next 2 years, but over the longer term, which means potential growth is going to improve from 1.5 to about just under 4%, which should solve a lot of our fiscal problems long term.
Absolutely. We are going to be finding that a lot of consumers are going to be put under strain by the increase in the VAT rate. Do you think that Minister and Treasury had any other choice there in finding the money for the deficit?
I think choices were very limited this time around, but of course there is some cushion to the poorest of the poor. You would have seen those that receive social grants. They have received an increase which is above inflation in terms of the money they receive, which helps to cushion them. And again, the zero-rated products, the foodstuffs which they consume, will remain to be zero-rated. So there has been some measures to cushion the poor. And again, in addition to that, there has been some of the lower tax brackets have been adjusted fully for inflation, while the four highest tax brackets have not been adjusted for inflation, which means they have been cushioned somewhat to the increase in VAT.
The implementation of the wealth tax was speculated on before Budget 2018. Very many people thought that there was going to be a specific wealth tax created. It doesn't seem to have happened, though there are signs that it is definitely being phased in, and the wealthier are being taxed a little bit more than had there been no wealth tax. So what do you say to that? That where are we? Has the wealth tax been implemented? Has it not been implemented? Where are we with that?
I think it has been implemented. Started last year with the increase in dividend withholding tax. These are normally higher income earners that invest in shares that attract dividends. And this year, the increase, or at least the implementation of tax on estates that are worth 30,000 and more.
30 million.
30 million and more. That is quite important. It's also a form of wealth tax. So, but if you look in terms of the tax system as a whole, those that can afford to pay tax should pay a little bit more. And you would know as well that South Africa is one of the highest unequal society in the whole world. So it goes without saying that there has to be some equalization in terms of plugging the fiscal gap by making those that can afford to pay a little bit more. So in all respect, I think it's a fair deal.
Do you think that Moody's will respond positively to this budget?
We have been expecting a positive response from Moody's, and we do not expect Moody's to downgrade. However, they're likely to keep the negative outlook on our Baa3, which is the lowest investment grade. By the way, they are the only rating agents amongst the three biggest ones which still has us on investment grade. So that's quite important, which means our bonds remain within the WIGB bond index, which means we are not going to see the expected currency weaknesses that we have been expected by the market previously. In fact, we expect a 30 to 50 cents appreciation in the currency and a rally in the bond market by 20 to 40 basis points, which should decrease the debt service cost of government. So that is a positive that you would see coming from the market.
So as we wrap up, a good budget?
Definitely a good budget. It's a new dawn.
Thank you so much. And Azayo, we hope to have you back in studio soon.
Thank you.